exploring the investment landscape with a guru's wisdom and a strategist's insight. Good Life Companies presents The Market Enthusiast with Noah Brooks and Chris Needs.
Welcome to the first episode, the 2025 Market Enthusiast. I'm Noah Brooks, and with me, as always, Chris Needs.
Hello, hello.
How did 2024 go?
It was a big year. It was a good year. Lots of gains in the market.
Lots of gains in the market. Market rallied dramatically. We hit 5,000 on the S&P 500. Then we hit 6,000 on the S&P 500. How's that possible?
It's a big year.
I suspect that in 2022 and 2023, every single market prognosticator from the big firms, I don't care if it was Goldman or Wells, I think they were all wrong. Every single one of them.
They were very wrong, and we have a little thing in-house that we do for a grand old dollar prize each year. We do our price targets, Noah was spot on.
Yeah.
It was impressive.
Yeah.
How many points away were you? Like 13 or something?
I wrote on the whiteboard, 5,700 at the year end. And it's meaningless because it's a dollar, and I don't go out and tell people about that. But I was the closest, but I went over by about 17 points. So I got the dollar. I have to put the dollar back in for 2024.
Some prize.
Yeah. You know what, though? We didn't actually write down our number yet.
Nah, we'll get it on there.
What are you thinking?
I'm looking at 11% return in a volatile year.
Yeah. And we're going to come back to that, but I'm thinking in the 10 to 15% range, but with some drawdowns. With some drawdowns. Not necessarily like a 2020. 2020 was a little bit crazy. We had a 37% drawdown, but we ended up 18%. Right?
Yeah.
A lot of money to be made in a year like that. I don't think that 2025 is going to be that bad, but it's definitely going to be more volatile than 2024. Yeah, no question about it. Back to 2024, right? So S&P hit 6,090, which was an all-time high, and I think at that point it was up about 27.5%. We closed; it was up 23
and change.
Yeah, it's 23.5%. So not a bad year. 2 years back to back over 20%. Obviously 2022 was pretty rough, down about 20%. But we made that back in 2023, or almost all the way back, and then we came back and made new all-time highs in 2024.
Love to see back-to-back years like that.
Yeah, absolutely. So for people paying attention out there, growth was obviously the big winner in 2024. Again, right? Up over 30%. Value was up,
It had a good year.
Yeah,
in comparison.
If you looked at it on an absolute basis, up 14% in value, you'd be like, oh, okay, well, 14%, that's really good, right?
Comparison's the thief of joy.
10 years at, oh, I like that. Did you come up with that?
I've heard it somewhere before.
You've heard it somewhere. Comparisons are the thief of joy.
Mm-hmm.
Yeah,
I mean, we were getting real excited at the start of Q3, and we got that market rotation, and we're like, oh, here it comes. We're finally going to see value catch up the growth a little bit. And
not so
again,
much.
It was, and Russell jumped as well, and mid caps jumped, but it was short lived. It was like a Q3 thing, early Q3 thing, and then late Q3 and then Q4 was the mega caps again.
Yeah, well, I mean, it seemed like everything changed after the election, right?
Yeah.
So obviously, in terms of looking at stories and things that happened in 2024, I don't know if it was the biggest story. It depends on what avenue you're looking at, but certainly one of the biggest stories of 2024, no matter where you're talking about, was the fact that Biden dropped out of the race.
Mm-hmm.
Kamala ran, a good race, but I don't think she could distance herself enough from her prior self to really get out of the shadow of that, hard left. And Trump won, and then the market just reverted right back to tech and growth. And the fourth quarter was a massive, massive quarter.
Yeah.
So in the end, value was up 14. Equal weights, meaning the entire S&P 500 equally weighted together, was up under 13, 12.78. Mid caps, decent year on an absolute number, up 14. Small caps, depending on where you look at, between 9 and 13%. S&P 600 versus Russell 2000. But we had 57 new highs, as you mentioned.
Yeah.
So, the sky is falling, but in the end, great year for the overall markets.
Yeah, it was a low volatility year, but that doesn't mean there weren't fears going on. So, I mean, what was it? April, we had the initial fear where the market was hanging on stronger than we thought. Yields started ticking up again. We saw just a little tick up in inflation again, and the market started panicking a little bit. That sort of happened again, start of Q3, and then we had the carry trade issue, and then a couple bad jobs reports in Q3. So there was some fear about the path of rates, a slowdown in the economy, and it just seemed like we climbed a wall of worry. There was always something going up.
Yeah.
Even in Q3, where it got a little bit dicey on the large caps and the indices didn't move as much. But all in all, in the year, if you have one bad quarter that isn't that bad, you have a max drawdown of 8.7% on the S&P 500.
Yep.
That is a recipe for success.
Yeah, and there was a lot of stuff. There were a lot of moving parts, and I say that there's always a lot of moving parts. But we had the Bitcoin ETFs that got approved,
and then options later in the year.
Yeah,
the most successful ETF launches ever.
That's crazy, right?
Yeah.
I mean, you have these NVIDIA single
two times. Yeah.
I was going to say single stock with leverage ETFs. You'd think they'd be the number one, but Bitcoin, I mean, they had flows, and obviously, I don't know if that worked, but it certainly contributed to the rally in Bitcoin.
Mm-hmm.
I mean, 104,000 in 2024.
And, obviously it had a good year throughout. You have all those flows coming in. That totally makes sense. But a lot of the appreciation also happened in Q4. Obviously, there was a move up on a lighter touch on crypto from the incoming Trump administration. Yeah. And then you have, another mega cap that sort of helped the concentration we've seen in the S&P. One of the wildest moves of a company this size was coming into Q4. Tesla was down 3%. And I know there's a lot going on with Tesla more than just the business, but it ended the year up 65% after being negative coming into Q4.
It's a massive rally.
That's a massive rally. And then NVIDIA was up 170+%. So
yeah, NVIDIA, the first stock to hit $2 trillion. That happened in I think it was in April.
First to hit 3 trillion.
First stock to hit 3 trillion.
We're at like 3.5 today.
Yeah. So, somewhere around June, NVIDIA popped up to 140. That's when it hit the 3 trillion mark. And then we've kind of been stuck in this range in the 140. It actually got down to around 92. You'd said you owned it for a long time on the last pod. Hopefully you didn't sell it out at 92 or anything like that.
No, I actually added at 98.
Oh, geez.
So,
wow.
Yeah.
Feeling like a champion.
Yeah.
Because today, as we're sitting here recording this, it's right close to a new all-time high at 150 plus.
Yeah.
Up another 4% today. What was that move on today? I didn't even...
I know Jensen is speaking at some point today or tomorrow. I think it's a healthcare industry event. Anytime he talks, he's a big cheerleader. The market kind of, I feel like, jumps in anticipation. He's positive, fun guy, smart guy. So
yeah, he's definitely
but
a smart
speaking
guy.
of maybe on the other side of things, Microsoft was the laggard of the Mag 7.
Yeah.
He was up like 12% or so for the year.
Is that it?
Yeah. That's and like I said, in comparison,
right?
It's a rough year.
Yeah, there's no question about it. Another rough situation for Microsoft was the global tech outage.
Yeah.
Right.
CrowdStrike sort of bringing down all of the Office suite.
Yeah. I mean, I feel like people forget about that pretty quickly, but that happened. You and I were in here. Were we in here or were we remote?
We were, I think it was it a Friday? We were at home.
Friday.
Yeah, I'm just sitting there like,
Nothing working.
What do we do?
Yeah, it wasn't until later in the day, but they had like 3,000 flights were canceled, systems, everything running, or not everything, many things running Microsoft Windows that had this patch come through were just
Inoperable.
inoperable, not working. And it makes me think, I'm going to come back to this when we talk about 2025, but it makes me think, like you had said earlier, this was an error, right? This was some type of coding error.
Yeah.
But what happens if it's not an error? What happens if it's an attack?
Yeah, if you have a bad actor taking advantage and holding it hostage where you can't fix it in 12, 24 hours, some were affected on a longer time horizon. I don't know exactly how or why. I think we were out for about 12 hours and we did get access before the end of the day. We were able to trade, no issues, which was nice. We didn't have to put out like a message to our team of advisors but yeah, if someone held that hostage for 72 hours, 3 days, we'd be screwed.
Well, so I don't know how your weekend was. Fourth of July. Geez, New Year's Eve was Wednesday, and then obviously we worked Thursday and Friday. We had a little bit of snow over the weekend, but we had some ice here in southeastern Pennsylvania, and there was just accidents everywhere. We lost power on Saturday night. And it wasn't for that long. It might have been for an hour and a half or so. We were in the middle of watching Interstellar. I don't know if you've seen that.
Oh, one of the greatest movies.
No, not the one from the 90s. This is hot on Netflix right now, but it's actually from 2014.
Interstellar.
Yeah.
We're talking Interstellar. Like,
there was an Interstellar in the 90s.
Oh, I didn't see that one. I mean, I know
So
the one
you've
with
seen
McConaughey.
Yeah, Matthew McConaughey.
Yeah.
I don't know how I missed this thing. It was from 2014.
How did you miss that?
It's crazy. I feel like it's an Elon Musk type of situation. We're traveling to other worlds to start the human race over again. It was crazy. I was tearing up at the end.
It was, oh yeah, that's a tearjerker at the end. Seeing his daughter. Yeah,
it was crazy.
My thing is when they're on the one planet, might have been Miller's planet, where, like, you can hear a tick like every 7 seconds, and that's supposed to be like a year on Earth or something.
Yeah.
Wild.
That's like a very Carl Sagan type of movie. I kept thinking about him. I had the pleasure of reviewing some of his books when I was younger. I haven't read anything recently. Super deep. But that is kind of on the same level. And then obviously people today talking about, whether it's going to Mars, but essentially populating other portions of the universe or other universes. Yeah. If you haven't seen it, it's on Netflix. It is killer.
Yeah.
Great movie. It's probably one of the best movies that I have seen in 2024.
I'm a sucker for space movies. Alexa always makes fun of me for it, but I just love them. I just love it. Like, I'll watch Martian like all the time. I can't tell you
that was a little too light for me, The Martian.
Yeah.
But what was his name in The Martian?
The
actor.
Yeah.
He was also in Interstellar.
Yeah.
But hold on, going back to this. So we lost power halfway through this. And you kind of wait a few minutes, and you're like, well, it'll come back on. We don't lose power too often. And finally, I went downstairs. I got the little suitcase generator. We do not have a whole house generator. We have 2 small suitcase generators that can run, fridge and the router and the internet, because quite frankly, that's what you really need. We need the router. We need the modem, the cable modem and the router, and then the television and the fridge.
Power's out, whatever. We got what matters.
We got about an hour and a half in, and I went downstairs. I got the generator, brought it back up, started it, went to get the electrical cables, and boom, power turns back on. Right? So awesome. I didn't have to worry about it. But you always get thinking, what happens if the power goes out? At least I do. What happens if the internet goes out? Even if you had power and the internet was out, and I'm talking, you said bad actor, right?
Mm-hmm.
If power goes out, internet goes out. I mean, we wouldn't really be able, if we were at the office and the internet worldwide went dead, we wouldn't really be able to work too hard.
No. Not
we
at
could
all.
we could plan the next podcast, but that would be about it. I mean,
Same thing when the auto loan software went out and they had to like do the loans by hand, doing like amortization skills by hand. Like,
oh
it
boy,
doesn't sound fun.
yeah. You got the old HP1C business calculator out there.
Yeah.
That would be tough, but it really makes you think. And I don't know, are you a prepper?
I'm not a prepper.
I'm
I'm an under prepper. I'm screwed
an
if
under
something
prepper.
happens. Yeah.
I'm a mild prepper. I'm a
Oh.
mild prepper. I have enough food, you know, that we could make it through for a while. But I'm not like a heavy prepper. It just I always think to myself, I probably should do more than I currently have. And each time the power goes out, I start playing that in my brain. Honestly, I do. And you know, so for people out there, man, if you do not have at least a few weeks worth of food for you and your family,
You'll be prepared if we have a Fallout scenario. I know you watched that show this year.
that was a great one for 2024 Fallout. Yeah, loved it. Hopefully they're coming back with a season 2. What other good movies did you watch in 20?
My favorite movie of the year was Dune Part 2. I thought that was awesome.
Snore.
You didn't like it?
Man, I'm not even going to watch it.
Oh.
I
geez.
saw the original Dune in like 1983, and it was probably, I was way too young to be watching it. I don't know, I was 7 or 8 years old. Hated it, couldn't follow it, didn't understand it. And I don't know, anything Doom adjacent, I'm just like, nah, I don't.
It poisoned you forever.
Yeah.
I didn't think Part 1 was that good, but I thought Part 2 was pretty darn good.
Okay.
Top movies of the year were Disney movies. You know, there's been much talked about how Disney's been struggling and maybe criticizing how they've done their artistic projects over the past several years, but Inside Out, I think, was the top. Deadpool and Wolverine was second. And then I think they had the third one as well. I can't recall exactly what it was. But it was Wicked. Wicked, that one all the girls are going
I
crazy
have not
for.
seen Wicked.
Yeah.
I heard it was really good, but I haven't seen it.
Yeah.
I'm not sure that it's something for me.
Yeah.
Might be in the you know, if we go up to Broadway or something like that and see the actual live show, I'm sure I would enjoy it.
Yeah.
And I'm sure I might be forced to watch it at some point.
Yeah.
I might be, I might not be. I don't know. Maybe I could get away without watching it.
Interesting little recovery though. They were struggling and it was much talked about, but they had a good year.
Well, they replaced, or they have a plan to replace Bob Iger.
Oh, is
Right?
it going to work this time?
Well, I mean, he's out in 2026. I mean, I don't know if he signed the resignation letter, but they have a plan to replace him.
Mm-hmm.
That also goes in, I mean, not the same vein here, but Starbucks, they replaced their CEO.
That had a big market move between Chipotle. Yeah, they got Chipotle's CEO, Brian Nichol.
Yeah.
Who was just killing it at Chipotle. I mean, I think everyone's probably gone to, and a lot of our advisors probably know the success Chipotle's had as a stock. But, they fell when Nichol went over to Starbucks. And Starbucks, on the other hand, they jumped.
Yeah. There was an article out this weekend talking about $12 cups of coffee.
Oof.
And now I'm not generally a Starbucks guy. Occasionally I see your mug sitting over there. But I think to myself, well, okay, if you're going to spend $12 on a cup of coffee, at some point, are you not going to go to the grocery store and forget the Keurig, but aren't you just going to go back to drip coffee? I mean, isn't there an alternative to $12 cup of coffee?
We've advanced. This is an interesting thing we did, which was by accident. So we were up in Vermont for a trip in September and bought a whole fancy bag of coffee. Didn't realize it was a coffee bean. So, get on Amazon, boom, 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 have a coffee grinder in 18 hours to my front door. Pretty awesome.
Yeah.
And found it's so much better when you actually grind the coffee rather than getting it pre-grinded. It has a better aroma. It feels like it's not as dried out. And just has a better taste to it. So that's what we've been doing. So we get $18 bag of Starbucks.
Very posh of you.
And yeah, it worked out well. I feel like everybody's hating it. Since Bezos, I'm not a huge Bezos fan, but since Bezos left Amazon, I feel like they've been trending downwards a little bit in quality for the customers.
Amazon?
I feel like they're maybe focusing more on profit now, as prices are slowly ticking up. Just something I see, but I can't complain when I got a coffee grinder to my front door in 18 hours. Didn't even have to stop at a store.
I'm all about Amazon. I think you know that as much as anybody else does. They're getting faster and faster and faster. I've seen offers of like 4-hour delivery.
Oh my
Now
gosh.
we're a little bit remote. We're kind of outside the main area, but a few items they've offered that same day delivery. Haven't taken them up on that. The next situation is going to be drone delivery,
Yeah.
right? I
Did you hear about that story about the guy who shot a drone and got arrested?
No.
I think it might have been an Amazon drone who just pulls out a revolver and tries to pop in the middle of town.
Did
and
he
got
have a
arrested.
drone hunting license?
I don't think so.
I see around our area we have some wonderful people in pickup trucks that occasionally have a drone hunting license on the back of their truck.
Drones have been a big issue lately.
Yeah, certainly have, right? And it's not going to go away. I mean, automated hovercraft, robo taxis. I mean, we were talking about Tesla earlier in the week, and is Tesla going to be a car company or are they going to be a robo taxi company? I mean, they're all car
maybe
adjacent.
a robot company. We've talked about Optimus before.
Yeah. I mean, that's something that is going to change in 2025. We're going to start to see more and more businesses that are adapting to that type of delivery service. And we're going to see aircraft companies. I mean, the end of 2024 really was a big move for some of these micro cap aircraft companies.
Mm-hmm.
They started rallying. Here in Reading, Pennsylvania, there was a company called Joby that stopped at our local airport on a test mission, I think from JFK down to Miami or something like that. And it's a completely autonomous flying chopper, if you will.
Yeah.
Now there was somebody in it, but they weren't flying it apparently. And there was people that were stopped that are driving.
Are they electric too?
They are.
I think. Yeah.
Yeah,
I think there's also like Archer. I think is one
Archer
of their compares.
Aviation.
There's been explosive growth among them. Yeah.
Growth. Well, explosive growth in their stock price. I mean, they're not actually
making
any money. They're spending a boatload of money. But it wouldn't surprise me to see those stocks continue to move higher, or just the whole idea of the autonomous robo taxi, whether it's an air taxi. I think air taxi is significantly harder. They have millions of hours of data already from the robo taxis, whether that's the GM Cruise, whether it's the Waymo, right, from Google, whether it's Tesla. I mean, they already have a lot of data on it. There was something earlier this week where one of the Waymo taxis hit a food delivery drone, one of those little guys on the street. Drone on drone action. I don't know. That seems.
Whose insurance covers that?
Yeah. So going back to the CEO situation at Starbucks. More recently, we had the United Healthcare CEO who was brutally murdered in a daylight attack.
Mm-hmm.
That was obviously perpetrated by a crazy person, right? But after that, you had a lot of people, I don't know any of them personally, but you had a lot of people that seemed to take the side of the murderer.
Yeah.
And I'm not saying that I don't understand that position. I don't understand taking it and being happy that he murdered somebody. I do understand the healthcare crisis, or the feeling of the healthcare crisis in the United States. When you start to look at some of the data, especially, there's a lot of information out there about United Healthcare. You had even mentioned it. It was one of the companies that had the most rejected claims out of any healthcare company in 2024 and 2023.
Yeah.
And I'm not sure what changes. I don't know if this person's murder is going to get, I mean, I don't know how long that's going to last, or if it's going to have any lasting impact on the healthcare industry. But it seems like 2025, there might be something coming to a head because of that.
Yeah. I mean, obviously, we have an administration coming in that maybe has a skeptic that's going to be leading health services with RFK Jr. And then you have Elon and Vivek who are looking to cut prices however they can. I mean, I'm sure there's steps that are going to be taken from the major insurers to maybe prevent outrage, maybe take some more customer benefiting policies going forward. And sad it takes something like this for that to happen. But in some way, I feel like they have to do something with the cost of healthcare, which has gone up far faster than, otherwise inflation has across, full basket of items. And, the government actually just changed how they calculate health. We always talk about one of our favorite followers, Charlie Bolello. He's spot on it all the time, critiquing it. They made a change to how they calculate the healthcare component and
of inflation.
And it shows like it's barely gone up in the last 5 years, which we all know is false. You can't just pull that one over and convince people. But if you look at the healthcare component, it hasn't risen that much in terms of government, what they say is happening because of a weird way they calculate it. But yeah, something needs to change. We have to find a way to make it more affordable, especially when we're leading across the world most of the advances in medicine. And hopefully, coming back to AI, hopefully that can start making more affordable, maybe make the research projects a little less costly.
It does seem to me, though, that the real balance is between healthcare profits and treating people.
Yeah.
Right. And at least the way it's been over the last 20 or 30 years, treating people not from maybe not from the standpoint of the pharmaceutical companies, but from the standpoints of the insurers, treating people maybe has been secondary to profitability.
Yeah. And treating takes precedence over prevention because that's how they get paid.
I mean, if you were redeveloping a healthcare plan in the United States, you would probably put prevention up at the top and treatment as number two. Not that you wouldn't.
If you go to a healthcare provider, chances are if you have a problem, they're going to go right to treatment rather than they'll try and get you on some beta blockers or something rather than saying fix your diet, go exercise. I'm on
a beta blocker.
Yes. Well, see, they're quick to dole out those scripts.
Well, they said, no, you need to get on this and need to start working out more. And I did a little bit.
Get on that bike. You're going to bike a lot of miles this year?
2025 is going to be the year of the Peloton for me. I injured my leg last year, my knee a little bit, and I didn't really ride in the fourth quarter. We were started in the beginning of the year with a challenge, which was the Tour de France challenge, which I think they ride 2,250 miles, and that was my goal for 2024. I did not do that. I only hit about 1,000 miles. 2025, Kirst, if you're listening out there, we're gonna try to do it again. We have a small group of people that were on it at the beginning of the year, and we're gonna try to do it. I have to. I'm putting it on in places that I shouldn't, taking it off in places that I should. I don't know. It's just, yeah, I have to. But you seem like you're at the upper end of your range a little bit.
Yeah, I'm definitely going on a health kick this year. I'm going to finally try and cut out sodas, which anyone who knows me out there knows that's my soft spot. It's what I love, but I gotta do it. Gotta cut it out.
Did you grow up drinking soda?
Yes.
Like as a little kid?
Yep. Mass amounts.
Your parents just fed you Coca-Cola and Mountain Dew?
I remember there was one time my mom tried to stop it, and she got V8 for a week, and I just stopped drinking altogether. And she's like, I'm gonna get more soda again.
I love V8. The spicy V8? I could drink that all day long. So, hey, we have a bunch of other stuff here to talk about. The one thing I know is on people's mind is buying a house. And one of the things that happened in 2024, obviously with interest rates, I mean, I think they leveled out in 24, they went up in 22 and 23. But the other thing that happened that might be good for home buyers is that the Association of Realtors was actually sued over 6% commissions.
Mm-hmm.
And I don't know how that's going to work out in the end, but it certainly kind of shook up the home buying industry. And I think people now may be armed with more information and might be able to I don't want to use the word haggle because that's not really what it is, but make more informed choices and decisions about the realtors when they enter into agreements on how much they're actually going to spend on the commission for the realtor.
Well, think about 6%, and I have a friend who's a successful realtor as well. But I mean, like, think about 6% on both sides. That's a lot of money for every single deal. Seems pretty antiquated and seems ripe for disruption. So I wouldn't be surprised to see that movement and to see, just like every other industry, it's sort of a race to the bottom. If you're talking about ETFs and mutual funds, things like that, I would expect to see fee compression over the next 3 to 5 years in that realm.
So I watched The Big Short over the weekend. We're flipping through and doing some undecorating for Christmas. We threw on The Big Short, and a lot of great scenes in the movie, but there was this one spot where they go out to Florida and they start talking to a realtor, and I think she's driving them around, and she says, "You see that house? I sold that to this couple in whatever year it was for $425, and the next year they sold it for $499, and then the year after I sold it again for $565, and now Jim has it and he's selling it for $675." And obviously that realtor, I know this is a movie, but obviously that realtor got paid each time, time and time and time again.
Then they're bragging about the loans, which they make more money on as well, bragging about the ninja loans, and the Steve Carell character takes them over. You're like, why are they confessing?
They're not confessing, they're bragging.
Yeah.
Right. That was a great line. Obviously, very old movie. I think it held up really, really well. And I don't know if it was meant to be as funny as I found it this past weekend. I laughed out loud a bunch of times.
Yeah.
I mean, to me, it was really funny. Obviously, being in the industry, global financial crisis, not so funny. But the way that this was positioned and put out there, it just makes you think. I mean, I've used realtors, and you're talking about a 6% commission versus some other type of scenario. I feel like, yeah, there's a race to the bottom. I feel like,
except in that industry.
well,
everywhere
I mean,
else.
there's Zillow, there's Redfin, there's a lot of do-it-yourself type
Rocket
of stuff.
Mortgage.
But I've had experiences where I've went in, bought a house, didn't need the realtor. I've had other experiences, and I haven't owned that many houses. I've had other experiences where the realtor came in, did everything, really saved my butt. I didn't know how to do it at that time. I didn't know how to market it, and they were well worth the money that I paid them. But it seems like there should be some type of scale, not 6% going in, but like the longer it doesn't sell, maybe. And then you might say, well, if they're not selling it, then they're not doing it right. They should get less. And so the thing that got me about that movie and why I bring it up here is, are you going to just have the realtor sell the same house over and over again and continue to get paid for it? It's not illegal, obviously, right? I mean, they can't stop someone from wanting to sell it. It's not those things where I just feel like there should be some type of scale, some type of sliding scale for them. I don't think they should be able to just sell the same thing over and over again. And to all my realtor friends, I'm sorry. I know that they put in a lot of time, a lot of effort to get these houses sold. And when they do that, they should be fairly compensated. There's no question about it. So I don't know if them settling for $1 billion or something like that is going to change it. But I think 2025 is going to be the year where technology really interfaces with real estate and makes it more accessible to everybody, a little bit less costly. Certainly Zillow has been doing that over the years, and now you have some other competitors to Zillow that seem to be popping up and making some headway. Depending on where you lived, we had a few things that happened here on the East Coast that seemed to be, well, I don't know if they were the same thing, but we had this bridge collapse, right? Where the bridge in Baltimore got ran into. And then we also on the East Coast, we kind of had a solar eclipse.
Yeah.
Now, the solar eclipse isn't really going to have an impact on supply chain, but the bridge definitely had an impact on supply chain. And it goes back to that electrical outage thing that we were talking about earlier. I'm kind of this half prepper. So I think to myself, okay, you have this solar eclipse, but there's also solar flares, right? Solar flare, some type of EMP, it takes out the East Coast for electrical, and we were all in a bad spot.
Yeah.
You have this bridge collapse, which apparently, I didn't realize this, but from a supply chain standpoint, a lot of cars went into Baltimore. And so there was definitely some downtime on the car lots because of this. And obviously they had to rearrange their routes and go down to Norfolk and certainly up to New Jersey. But I feel like we have these old supply chain routes that could be, I mean, think about it from a terrorism standpoint.
Susceptible.
Yeah.
Yeah.
And, obviously we had this horrible attack in New Orleans for New Year's. There was another one in Germany in the Christmas mart. But how hard would it be to drive a bomb-laden truck across a bridge and blow it up? And
where there's no security, essentially. It's
Yeah.
just stop. Or a boat. I mean, I guess around some of those areas there probably is some restrictions, some way to control flow, but they could just pull right up.
Again, not a full-fledged prepper, kind of a half prepper. But those are the types of things that keep me up. I mean, obviously the markets and the economy, that's on my mind all the time. But those other like weird little things that you see, and not that the solar eclipse, I was worried about it, but it just makes you think about what else can happen naturally.
Yeah.
Right? That maybe we haven't experienced here in a while. There was a solar flare in, I think it was the late 60s, early 70s in Canada that knocked out electric for a long time.
We supposedly were going to have a big solar flare this year, but nothing ultimately ended up coming of it. No damage or anything. At least I'm aware of.
If you go on TikTok, I bet you can find out all of that information and more. Are you a TikTok guy?
I'm not a TikTok guy.
What's your social of choice?
Facebook or X.
You even said X.
I'm an old. Well, finally. I feel like I'm an old head in that way. I'm not on the new TikToks or anything like that.
No Blue Sky or anything.
No.
Where would you ever consider getting an account there?
I'd rather be done. I'm not going to add social medias at this point. If anything, I'll decrease.
Yeah. The fourth quarter, I really was thinking about New Year's resolutions, and I'm not a big New Year's resolution guy. I know last time on the pod, we talked about some financial resolutions. I have a hard time sticking with them. I think everybody has a hard time. You say, I'm not going to do this in the new year. And I mean, it really is difficult.
Yeah.
You can do it for a short period of time, but doing it for an entire year, I mean, that's pretty rough. I'm going to try to reduce my socials. I'm going to try to reduce them. I feel like every time that I have a few down minutes, I'm trying to go to a social to look at it, to scroll. And it doesn't necessarily matter which one it is, but I'm scrolling. And there used to be a time in my life, and I think in a lot of people's lives, where you weren't scrolling all the time. If you had a downtime, you would pick up a magazine at a doctor's office. I don't even know if they have magazines anymore in a doctor's office.
It's a quick dopamine hit that when you're anxious about something, or you don't have your mind on something exactly, that's the first thing you do. It's a natural reaction,
right?
You don't even realize it, and then next thing you know, you're swiping around.
I have to break that personally. I don't think it's healthy. I mean, the other day I heard on the radio an ad for an attorney that was suing the socials over kids' behavior. And the items that they listed, that they were spelling out on the radio, I was like, ooh, I have that. Ooh, I do that. Ooh, I and it's like guilty, right? There's something askew when every moment of downtime that you have, that you're throwing on your phone and going to a social.
Changes your brain, yeah.
It does, right? It rewires a little bit. So I don't have a massive prediction for 2025 in terms of socials. I don't think they're going to go away. but I think there might be a little bit of a pendulum swinging backwards for people, and maybe not for little kids, maybe not for young adults, but for people in my age range and maybe your age range. I think we get to a point where, like, there's I'm a big outside guy. It's not like I'm on it all the time, but I have fallen into this trap. I think the pendulum swings back a little bit, and maybe we don't spend so much time on it. That could also be wishful thinking.
I hope you're right.
Did anybody in your family, you have these little kids, are they on any socials?
Nolan's addicted to YouTube. We have already failed at our resolution to stop him from being on it, but we're going to decrease.
You're only like 6 days in.
Yeah, we know.
Oh boy.
I come down from breakfast. I'm like, what's this? He knows how to get to it now, so it's like we can't prevent him.
Where do you think it all goes? I mean, technology is not going away. The socials aren't going away.
We're going to end up with all these it's just the human forms walking around, but when really they're living in, it's like Black Mirror or something. It's like all these people are going to be like living in their devices, and like your human form is just to like remain.
I don't like it.
Some sci-fi stuff.
I don't like it one bit. Yeah. So going back to finance for a little bit and houses, we had our first rate cut of the cycle, right? Federal Reserve came out. They said that the data was showing inflation coming down. I mean, inflation fell dramatically over the last, say, 2 years or so, 2023, 2024. I don't think I know we're not at the 2% target yet, but it's fallen dramatically. It fell enough that we've now had at least two. Is it 2 or 3?
We've had 3 cuts.
Yeah,
in
cuts.
Q3, we started seeing the jobs numbers disappointing. Inflation was coming down, which was good. But it got to the point where people started saying the Fed erred in not cutting in July. And then ultimately they did the 50 basis point cut in September, which was long awaited. And yields have essentially ticked up ever since then. And we got another 25 in November and then another 25 in December. But now they've essentially pulled out a lot of rate cuts going forward. And now we're only pricing in 2 rate cuts or accumulation of 50 basis points next year in 2025.
Only 50 in 2025?
Down from 100. So I think there's some maybe air that can come out of valuations a little bit. And if numbers remain strong or inflation keeps ticking up, which is the trend we've seen the last 3 months, we could be in a tough spot where markets might see some volatility as the Fed might go even lower than 50 basis points in cuts for next year.
So we have an administration coming in that has telegraphed what I would consider to be some inflationary policies. And I don't want to get into the morality of any of it or even the policy itself, but specifically on its inflationary nature, it seems to me that that's going to be problematic for the Federal Reserve.
Yeah, tariffs and removal of working age people. Those are 2 things that are definitely you would chalk up on an inflationary side of things.
Yeah. One of the things that I've been reading is there's some farm owners and production facilities that employ, if you want to employ immigrants, let's put it that way. You want to call them illegal, however you want to say it. But essentially, the people that are picking our food for us, right? And they're saying that removal of these people, they will find replacements, but not at the cost of the current people. So that's going to be inflationary. Now, maybe it's one time, maybe it's a scenario where it ramps up for 6 months. I mean, this is not something, if these types of policies are actually put in place and they start to happen, it's not something that's going to happen overnight. It's something that's going to take a year or 2. And so does that mean the entire time that these policies are being worked out, that inflation is food inflation or wage inflation is going to continue to ramp up? That seems problematic for the Federal Reserve. And one of the reasons that we've had a little bit of volatility in 2024 is because of the pullback on expectations for the rate cuts. If we continue to have those pullbacks So it was 100 basis points, meaning they were going to lower by a full percent, and now we're expecting a 0.5%. If we continue to have inflationary policies in place, maybe they don't lower again. How does that impact the market?
That would have a drastic effect in terms of on discount rates used in, model valuation models. You would likely see price to earnings multiples come down a little bit. You'd see money coming out of equities. Now, what I think the issue we're going to run into is the Fed wasn't as clear. So right now, I feel like the Fed's in limbo.
Yeah. Oh, they're in limbo.
The one thing you can say about Jay Powell is he's a very good communicator, and he's done that. His policies have been critiqued at several points in his tenure, but he's always communicated well. I feel like the December meeting was the first one where he didn't communicate well.
Yeah, they didn't like that. I mean, the market did not like that.
Worst
meeting.
Fed day since 2001.
Yeah.
So the problem we're running into is if they're not clear in their communication, that's going to cause more issues. We've seen, for a while on CPI day or inflation number days, the market would be volatile. Q3 and since Q3, I would say it's been very volatile on the jobs report numbers. And the Fed's always an interesting day. You see spikes up and down intraday. But if they stop communicating well or are more hawkish, that's going to cause issues for the market, certainly. And when I say they weren't clear, he was asked at one point, about the different estimates in the dot plot. And he said, well, some people incorporated what they expect policy to be under the Trump administration. Others did not include that. They're just working off the information we have in the economic numbers. And then some people didn't answer. So it's like we don't even know what they're basing it on. Now, obviously, that'll end shortly when we get more movement on the policy. But that was the first misstep on communication from Powell, in my opinion. And obviously, the market reacted.
Yeah. Well, I hate to use the word hope around investment, but I hope that they get clarification. And we've had this little bit of a lag over the last few weeks in economic data, as you pointed out to me this morning. So my expectation is that's going to start coming in pretty heavy. And, maybe they already have the data, right? They don't have to wait for it to be released, at least not to us. I hope that they are clear in what they telegraph. But at the same time, this new administration is kind of, they're telling us that these are the policies they're going to put in place. And these policies are inflationary.
Yeah.
Not all of them, but certainly some of them.
Mm-hmm.
So, going back to people actually out in the field picking, avocados or strawberries or whatever it happens to be, melons, the thought that crosses my mind is that it's going to be technology that kind of saves the day.
Mm-hmm.
I mean, you've probably seen some of those down in Florida. They use these big harvesting machines where they go through the trees and they shake them and they, the oranges drop and things like that. I mean, it's going to be a scenario where it's going to be technology that reduces that inflationary issue if, in fact, we remove these people from the U.S. workforce.
Yeah.
There's no question about it. And I suspect that, 23, 24 was the 2 years of artificial intelligence. Now we have a scenario where quantum computing is being talked about. You're getting some stocks that are into quantum computing playing. You were going down the rabbit hole of Google and their quantum computing device. What was the name of it?
Willow.
Yeah. Tell us a little bit about Willow.
So Willow is their version of a quantum chip, and what made it such a breakthrough when they announced it, I think it was early December, was when you do quantum computing, yes, you get exponential more calculations and exponential data going through the chip. But what you would see historically is you get the exponential data curving upwards, and then you'd also get exponential errors falling up. But what made Willow, such a groundbreaking thing was they said exponential data and calculations was occurring, but they leveled off on the errors, and essentially the more data they fed into it, they basically reduced the errors. So it reached a point where it was trained well enough to start reducing errors.
I mean, that seems like a good thing, right?
Yeah.
I think so. If artificial intelligence is the software of the world, the large language models, then quantum computing is the hardware that gets this stuff happening. Obviously, NVIDIA, one of the largest AI chip companies out there, I'm sure they're going to be working on quantum computing. And honestly, I'm not too familiar with it. I actually was doing a little bit of research. I just want to read this so everybody has an idea of what quantum computing is. And after I say it, I'm not sure that people will have more of an idea. At least they'll be able to think about it like this. Quantum computing is a type of computing that leverages the principles of quantum mechanics to solve complex problems much faster than traditional computers by utilizing quantum bits. And I wasn't sure how to, they call them qubits. I wasn't sure how to actually say that. I looked it up on the interwebs. Qubits, which are subatomic particles. When managed properly, these qubits can represent combinations of both ones and zeros simultaneously. So they can exist in multiple states simultaneously. The more qubits, the greater potential for large-scale computer power for problem solving, allowing parallel calculations through a phenomenon like superposition and entanglement theory. Sounds
That's
like,
real
right?
quantum physics and mechanics there,
Yeah.
isn't it? Yeah.
I mean, so this stuff is coming hard and fast. And really, it's going to be artificial intelligence and it's going to be quantum computing that really moves the American worker or the worker in general forward in terms of productivity and efficiencies.
And that's what we need. That's one of the biggest things. We need GDP to grow, not go stagnant. And, the most important thing, if you look at, the economic equation, would be benefits from exogenous events, positively being technology advances. Obviously you'll get bumps from policy. You'll get, normally detractions from geopolitical. But think about like when the Berlin Wall fell, there was a quote unquote like a peace dividend. So in that case, geopolitical was a positive. But normally, I feel like more often than not in our world, we're just humans. We're apes running around basically and fighting with each other. So it's normally a detract on that.
Speak for yourself.
But if we do get cuts to taxes and we do start seeing the benefits of AI and eventually quantum computing in the next 2 to 5 years, I think that's how we get to a plus 3%, above 3% sustainable long-term growth rate in GDP. And that's what we need because we have a whole lot of debt. If no one's been checking in on that,
over 36 trillion.
We need a higher growth rate to prevent our long-term yields from increasing drastically.
Going back to The Big Short, obviously the movie was made after the global financial crisis. But I feel like the GFC changed the trajectory of the growth in the United States and in the world. Now, we've talked about this in the past, that the United States actually came out of the global financial crisis much better than the rest of the world did. But I just think to myself, if that had not have happened, and yeah, it did, there's nothing you can do about it. But where would we be in a growth stage? Where would we be in a debt stage? Because not that the government didn't have any debt before that, but the entire idea of a bailout, right, and too big to fail came to light during that time period where it was just like, well, listen, it doesn't really matter what happens. The government's going to be there to backstop everything. And obviously that moved forward to COVID, where it was just like, hey, just write the checks, spend the money. It doesn't matter. We had this idea of modern monetary theory. And I think most people have thrown that out the window, not necessarily all people. But I go back and I think to myself, where would the United States have been in productivity, growth, and efficiency and debt if we had not had the global financial crisis? And I don't know that we'll ever know that. Mm-hmm. But it does seem like that was kind of the start of where the debt really was ballooning.
Yeah. And, I think people credit another good movie to watch is Too Big to Fail. That's less exciting. It's more dry, but it's a good look into what Paulson at the Treasury was dealing with, and the major bank heads, what they sort of dealt with as we went through that crisis. But they got TARP, and the market jumped on TARP.
Yeah.
But that wasn't the end of the market
Troubled
declining.
asset relief program.
Yeah. So the market jumped on that news that they're coming in and bailing people out and whatnot. But the market continued to go down into early 2009.
Yeah, March 9th, I think, was the low.
So, all that debt, everything they spent there didn't technically save everything. We continued going down for a while. It prevented the worst case scenario, certainly, which is everything seizes up and capital ceases to flow.
I mean, that was what they wanted to do, right? TARP, troubled asset relief. They wanted to make sure that the banks didn't go belly up.
Right.
So that's different than the market continuing to go down. The idea of a loss of confidence.
And they forced all the banks to take it, whether they need it or not. Others were more insulated and less exposed.
Yeah.
And basically they said, well, if you take it and they don't, it makes you look bad. Looks like you needed it. So they just gave the money out even to institutions that didn't need it. And I think that sort of started an issue with how we respond to crises, which led to how we did COVID. We threw so much money out there immediately, and then we kept it going. Then when the monetary stopped working as much, then we went to fiscal and we started sending trillions in fiscal out there. And you're right, modern monetary theory, I think it can be retired, because they would say you shouldn't have had inflation from that. Obviously we did. Sorry.
No, don't be sorry. Obviously, I mean, some of that had to do with the amount of money in the money supply. Some of that had to do with
which you never hear Powell asked about.
Yeah,
is money supply. I've never heard him ask that question after an FOMC conference, when that's such an important part of what the Treasury and they do.
Well, shouldn't the money supply, if we are growing, and you just say, hey, somewhere between 2 and 5%, I don't care if it's 3.5 or 4, shouldn't the amount of money in the money supply always be growing a little bit? Now, during COVID, we had it spike up and then come back down. And normally the money supply doesn't come down, right? But it should be going up a little bit all the time as our economy expands. And when it goes up dramatically, there's a lot of money on the sidelines. There's a lot of money coming in, and people have excess spending money. They go out, they spend it. That drives inflation. And I think that's, part of certainly what happened. There was a stat out there in September. We had more money in money market funds, whether that's money market mutual funds or just a regular money market at the bank. It was, what was the number that I had? $6.7 trillion in money market. How much of that money stays there, goes into CDs, or comes out and goes into equities in 2025?
I'm not convinced a majority will go to equities. I think you'll see maybe fixed income finally start getting a bid at some point. Yields are obviously higher. People can clip those coupons. That's my opinion. I have also seen in our daily, we see advisors who essentially dollar cost average out and are going into the models, which are some percentage equity, some percentage fixed income. That's one way. I think over the next couple of years, especially if we do ultimately end up seeing rates cut, you'll start seeing that bleed over. But I don't think it's like in 2 or 3 months, it's all going to move, obviously.
Yeah, no.
And some of this money wasn't earmarked for the market to begin with. A lot of people move money from checking accounts into, say, these brokerage money market funds and things like that.
Yeah. If rates do come down, and I'm not saying they're going to, short-term rates, people will be forced with, well, the yield on the S&P is X and the yield on my money market rate is X, so why don't I do this? Or equity income investments. But right now, the yield on money market is still significantly higher than the S&P dividend yield, and generally speaking, significantly higher than most blue chip dividend paying stocks. There's obviously always some REITs or some high yield payers out there that are paying more. But in terms of high quality stuff, you're still better off in a money market fund from a yield perspective. Not at all from a growth perspective, but from a yield perspective, you certainly are. I don't think that is going to change overnight. It's going to take a long time, and it may not be in 2025. And we might wait until 2026. There's people out there, there's strategists suggesting that they might actually raise interest rates depending on what inflation happens in 2025. I'm not particularly one of those people that thinks we're going to see higher, or at least the Federal Reserve move higher. We have seen bond yields, especially the 10-year yield, move higher, even as rates on the short end of the curve have come down.
Yeah, if inflation goes up, the reaction function is to raise rates. Certainly, they don't want a resurgence like the early 70s. Think of like a Volcker-like response. If we get another spike, they'd have to go big and really hike rates.
Yeah,
which would be painful, but unfortunately, it's necessary when you have the central bank trying to manage the economy the best they can.
Yeah, absolutely.
And we just saw, in September, the 10-2s uninverted after its longest ever inversion. December, we had both the 10-3 month and 10- Fed funds uninvert. We've talked a little bit about that. A lot of people talk about the inversion being a bad indicator, which it certainly is if you look historical finance.
Yep.
But if you look at timing mechanisms, the uninversions are actually closer to a slowdown scenario or a recession compared to the inversion, which precedes it normally significantly by 12 months, or we'll just say.
Yeah.
So we've seen those two uninvert. So potentially we're going to see more volatility.
So that puts us out at September-ish.
Yeah. I mean, the stock market returns aren't bad, but, generally you see more volatility, and those returns also are after the fact and account for Fed reactions to it. So we're likely to see some volatility. The stat I had is all 7 instances after uninversion since 1980. The median return was 16.9%. Average return was 18% in the 12 months after uninversion. Awesome returns.
Yeah.
But the downside, or positive, depending on how you're looking at it, if you have a lot of money in your money market, is all 7 of those instances had a 15% drawdown after the uninversion as well.
Yeah. I guess, people always want to hear what the forecast is for 2025. So let's give them something to work with, right? I think our expectation here is that in 2024, the largest drawdown was 8.7% in August. We had a 5%er in March, April, and almost 9% in August. The expectation for 2025 is that we're going to have a significantly higher drawdown. In my mind, and my math says 14 to 16% will be the drawdown. I want people to go back to 2020 during COVID and remember that the drawdown was 37%, and we ended the year up 18%. So my numbers are a little bit less volatile than that. I think we have at least a 10% drawdown. I mean, no questions asked. I think it's closer to 15%, but I think we end the year up somewhere between 10 and 12.
I totally agree with you. Volatility will pick up. I'm cautiously optimistic for the year. I think we're going to see a drawdown on some type of headline risk. Think of tariffs or tariffs, which we expect, and then a reaction that the market didn't price in, something like that. That'll send us down fairly quickly. And then maybe at the end of the year, maybe we get some news or at least progress towards some sort of tax reduction. And then you see the market run up and jump off that. So I think there's going to be a big drawdown as well. But I do think ultimately we'll probably be positive. I don't think we're going to have a year where we get crushed. But we're going to continue to slow down. I think we moved from sort of like a late cycle into a slowdown. I think it happened Q2 into Q3 when we started getting the disappointing jobs reports. So I think we're in the slowdown scenario, and it's possible to avoid a contraction, a recession. Certainly possible, especially if we start seeing efficiencies from AI and all the technology investments, which have been sizable.
Yeah.
If we start seeing that, then we can avoid the contraction, certainly. But that doesn't mean we're going to avoid volatility.
Yeah. Two different things.
Right.
Two different things. Well, so as we wind down our broadcast for the year, I just want to take a moment out there to give some actionable advice to people. So if you are young like me, and I'm going to be 50 in 2025. That's a little bit scary, but if you're young like me or young like Chris, I would be looking at any drawdowns as an opportunity to add to great positions that you might have in your portfolio, or even increase your percentage of equity a little bit. If you are older than us, if you are retired in your 60s, 70s, 80s, 90s, I don't know that I would make too many changes, if any, for those drawdowns. And, for everybody out there, I think this is a really great time, review your beneficiaries. Most people haven't done that in a long time. If you are still working, think about maxing out your 401k. I know I mentioned this last time, but first week of the year, a perfect opportunity to revisit that. If you're not making contributions to a Roth or a traditional IRA, please think about it. It's the best way to build wealth over a long period of time. And, number one, I know that 2025 is going to be a unique year. Let's call it a unique year. I want to reiterate for people to not make emotional decisions, certainly not politically motivated emotional decisions with their retirement accounts or with their investment accounts. 2025 is going to be another year just like everything else, and I don't want anybody to stop their compounding. So for everybody at Good Life, for myself, for Chris, for the investment team, for the advisors out there, don't bet against America. Don't stop your compounding. Welcome to 2025, everybody. Thanks for listening.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.